Getting a home loan used to be such an easy experience. Now it can just feel frustrating. And it's mostly because of government forces that have been pushed onto the banks. We're breaking down exactly what's changed and how you can still get a home loan easily.
Welcome to the Buying Your First Home podcast, your personal guide through the Australian housing market. Here we tackle the big questions and the small details that come up when buying your first home. From financial prep to finding the right neighbourhood, we're here to ensure that you've got all the knowledge at your fingertips. So let's take the first step towards unlocking the door to your new home.
So starting from the top, the APRA Buffer benchmark. This has been the biggest change. It's really cut a lot of people's borrowing capacity and serviceability.
Yeah, so the banks have to check if you can handle your payments if loan interest rates jump up by 3%. So this isn't new. APRA has bumped it up from 2.5% to 3% back in October 2021, and they've kept it there. This is what they call like the APRA buffer. So it's designed to give you some room in case interest rates change. Then you're not going to be immediately under mortgage stress. Let's say you are looking at a loan, say 6% interest. The bank's going to check and see if you can manage to pay at 9% interest. It's a good thing in some ways, but it's also a bit of a frustrating thing as well, Jaden, because it cuts your borrowing power by, about 5%.
It does. And it's one of those things where even the banks themselves have gone back to the regulator and said, well, at the moment, by our own models, we're at the top of the interest rate cycle. It doesn't look like the interest rate's going to get to 9%. But APRA said, no, we still want this in place to at least have some extra checks and balances.
And you can kind of understand where they're coming from there because, people are starting to feel a bit of the strain from where interest rates are. And if they didn't have these buffer rates in place back when they first put them in place, then the situation would be even more dire for some people. So it's kind of understandable. But if you're reaching the top of an interest rate cycle and they're not going to go any further, you wonder whether they're just trying to make it more difficult to get a loan and whether they're really doing the right thing by the first home buyer.
The second thing they've introduced in the last few years is a debt to income ratio. So the banks are measuring how much your loan's going to be compared to your income, and they want that generally to be below 6 times. Now, this is largely dependent on how much deposit you've got. If you've got a larger deposit, they'll allow you to have a debt to income of up to 8 times in some cases. But for most first home buyers, when you've got less than a 5% deposit, they are making you keep some of these debt to income ratios.
So what this means if you are looking to buy a home is that really there's 2 factors here. There's the amount of debt that you're taking on and then your income. If you can increase your salary by potentially, changing jobs or adding a side gig to pick up or even picking up some extra shifts, then you can bump up your income, which will then reduce the ratio. The other way that you can change your debt to income ratio is to get rid of some of the debt that you're carrying. So if you have a car loan or if you have credit card debt, looking to try and pay those off before you apply for a loan means that your overall debt to income ratio will be lower, which is something that the banks want to see.
The third thing the banks look at in more detail now are your expenses. Now, this has been a thing that has changed a lot over the last few years. It's a bit of an evolving piece, but there are a lot of banks that will request your last 3 months of statements. So if you've gone to a lot of fancy dinners, if you've had a holiday, some of them might say, whoa, Simon, what is going on here? But the good thing is if it's one-off discretionary thing, so for example, I was speaking to someone earlier this week and they said, well, I just got back from a trip to the UK. It was such a fun trip. I had a really good time, but I put my flights, all my food, all my meals. I spent a lot in the last month, but before that, it's back to normal. And we can explain discretionary expenses like that. So holidays, if you've been eating out a lot, you can explain to the bank, hey, it was Christmas time. Someone was being generous, buying lots of presents. That's cool. But some things are non-negotiable. So those are childcare, if there's gambling, private school, things like that just can't be explained away. Private health as well. So keep that in mind. If you've had a lot of those expenses, you're going to have to speak to your broker and work out the best way to manage it through.
And there's a bit of a contrast here from, how the banks used to do it. They would, to some degree would take your word for it in terms of how much you'd be saying that your monthly expenses are. But these days they're actually literally going through line by line sometimes through your bank statements to see what's going on. So there was an example, Jaden, I think you were telling me of somebody who went to Baby Buntings or one of those places and they didn't have children themselves. And the bank was like, well, are you not telling us that you are pregnant and planning on having a family, of just the present that they bought for somebody's baby shower or something? Like that level of detail, sometimes they'll go into that. It's pretty wild.
Yeah, and that was crazy because that was her existing bank that we were applying through. So they didn't actually want to see the statements, but they saw it because it was their existing bank. It was on the transactions there. So keep that in mind if you are looking at applying for a loan at those expenses. Another one that we've seen, funnily, is OnlyFans, where the banks see that as a gambling expense almost as a recurring thing. So as much as you might have be on some of those platforms. Keep in mind that the banks see that and will ask you when it comes time to doing your loan application. The next thing that makes a big difference is just, I guess, on that documentation thing. One thing I see pretty often, a paperwork palooza. Like Simon's got, I keep saying Simon, but you've got accounts with ING, with Up Bank, CBA, ANZ. You've got a bit of savings here and there. And it can be a bit of a mess when it comes time to actually show the banks your genuine savings history. So a lot of the banks will want to see you've got at least 3 months consistent savings for, say, 5% of your savings. So if you're buying a home for $500,000, they might want to see at least $25,000 of your own money saved up there. There's a couple of ways around this, but if you do have accounts all over the shop, it can be worth starting to consolidate those down, try and keep it in one spot, because it can make it more difficult when it comes time to get your loan.
And also there's an opportunity here, if you are planning on buying sort of several months into the future, maybe have a look at what accounts you have and maybe look at consolidating some of them, closing the unused ones, just kind of simplifying your financial situation. It'll make your application cleaner and it'll be easier for them to complete their assessment. And that also speeds up sort of the approval time on your loan. If it's more straightforward for the banks, then they will be able to process your paperwork more quickly as well.
Which comes to our next point, number 5, the waiting game. So there are some banks now that are crazy slow. So, one thing as a broker that we help you out with, and especially a competitive market, is when you make an offer, you can't be waiting 3 weeks to get your bank approval. You need to get it done in a week. Sometimes people are waiving their finance clauses. So having a quicker bank is critical here. So chatting to your broker and make sure if you're pre-approved, once you get a contract, is that bank going to be fast to process everything? Are they going to be slow? And to your point, Simon, if they're asking for updated statements and it takes you 3 days to get your receipts and things like that together, it's just not going to work. So you want to keep that in mind.
To that point as well, Jaden, and I know you guys at Hunter Galloway, like you have a certain sort of status with some of the lenders, which actually puts you to the top of the list. So applying directly through the bank yourself or potentially applying with some other brokers who haven't reached that level means that they're kind of placed lower in the priority queue. Sometimes working with the broker with that kind of status can sort of put you towards the top of the list.
Exactly right. Gives you your application a lot higher priority than everyone else. The sixth thing to keep in mind, and that has changed over the last few years and why it is getting harder, or it has felt like it's harder, is the retirement reality check. So as much as the banks might have eased up on how they're looking at your living expenses, they're really concerned now if you're approaching retirement. In some cases, with one of the banks, once you're over the age of 45, they double, or they second guess, they ask questions around your retirement because they're saying, well, Jaden, you're 45 years old. You're going to be 75 when this loan term finishes. Are you actually going to be working there? What is your retirement strategy? How much have you got in super? What does that look like? So one thing we do cover off, and as a part of our process, we'll say, well, what's your exit strategy? If you're past 45, which is the case for a lot of people, who might be 55, 60 applying for a loan, we need to look at things like your superannuation. We need to look at potentially downsizing. If you're buying a big home, can you downsize to a unit? If you're buying a unit, can you go to a different location? Things like that, the banks are asking questions on, and you need to address up front. And if you do address, you have a reasonable answer, they're fine to move on. But it is just something that has come up over the last recent years.
And this is an interesting one, Jaden, because it's not the kind of thing that you would think of if you weren't working in the finance space. Like buying it at 45, you don't feel like that's a particularly old age, and you're not thinking about how am I going to retire and what's that going to look like, all that other stuff. It's kind of something that's sort of further ahead in the future for most people. So yeah, an interesting one that doesn't come to mind immediately for most people who are looking at buying. But as you say, really important to consider if you're buying a house at an older age, for sure.
The next thing that's changed over the last few years is the size of your deposit and how the banks weight you for risk. So in the eyes of a bank, the smaller deposit you have, the bigger loan they give you and the bigger risk there is, compared to if you have a bigger deposit, their loan's smaller and you're a lower risk. So I think that's changed over the last few years is the way that the banks see this risk rating and the way that they'll charge you interest rates. So a couple of years ago, didn't matter if you have a big deposit, a small deposit, everyone pretty much got the same rates. These days, if you have a 5% deposit outside of, say, the government schemes, you actually are charged a higher interest rate because you're seen as a bigger risk to the banks. So it's amazing. You'd sort of think, well, you've got a smaller deposit, it's kind of harder for you to get into the property market, should be easier, but it's not that way. So potentially the more savings you have, if you're outside of the home guarantee schemes, then potentially the lower interest rate you have. But yeah, interestingly, if you are getting the assistance of the home guarantee scheme, that's the 5% government scheme where the government acts as your guarantor, you get the same rates as if you got a 20% deposit. So this is where having a broker to help you through this process, because not all banks can offer this home guarantee scheme, can really help you find the best deal in your situation.
And we're talking about how it is kind of feels like it's harder to get a loan nowadays than it used to be. And I mean, that's kind of true. Jaden, remember like years ago, I guess almost pre-GFC, the amount of money that banks were willing to lend with such little criteria. It was a very different kind of lending environment back then. 100%, 105% loans in some cases, with a lot less scrutiny. If it feels harder to apply for a loan now than it did back then, it's because it is.
Definitely is. But also with this scrutiny has given our banking system stability. So at least we've not seen those big downturns. Mortgage stress hasn't increased dramatically. I guess it's also caused a bit of a bank battle. So banks, next point, are still fighting really hard for your business and they're still wanting to get your business over the other bank. So one thing as a broker we can help you out with is shopping around. And instead of you having to go to this bank and that bank and compare, well, will they give me a better deal? Is NAB, CUA, whoever, we can help shop you around and find other options that could find your situation a bit better. And one thing we've seen a lot lately is sort of the growth of potentially non-banks and alternate solutions for property investors. So where that servicing buffer is really started to bite people is if you're trying to build a portfolio, if you sort of hit your debt to income limits as you sort of get into your second and third property, the big banks will say, sorry, we can't help you anymore. But there are non-banks out there, there's alternatives that can be more flexible criteria and give you options to increase your portfolio and build your wealth with property.
And on that subject about the battling, this is one practice that the banks do that I really think is a bit dodgy, is that they don't reward loyalty. So if you're potentially a new person that's going to get a home loan with, say, the CBA or other big banks, they'll give you these sweetheart deals. They'll give you a better interest rate, a better deal, all of that stuff. And then a couple of years' time, they'll maybe offer a better deal to new clients, but you're still on a different interest rate and different benefits. And they won't come back to you and say, oh, hey, you know how we're making the loans cheaper for these people? We should make it cheaper for you too because you're loyal to us. They don't do that. So one of the key things is keeping an eye on when you reach that, say, 2-year mark with your home loan, to think about reaching out to, say, a broker and doing a home loan health check to see whether you're still on the best rate. Sometimes, Jaden, you guys can just call up the banks and let them know the situation and ask for a discount back to the current rates that they're offering.
Yeah, it's a service that we offer all our existing clients every at least 12 months. We'll do a home loan review. We'll contact the bank first nicely and say, hey, we're looking at doing a review. This is where the market is. This is where your rate is. We'd like to get a better deal. Sometimes they'll come back and say, yep, we definitely want to keep that person happy. Here's a better discount. The next step in that process is, well, we sort of start rattling the cage of it and say, well, we're going to leave. Here's the other bank's offer. If you don't match this, we're going to leave. And like you said, Simon, it can take this sort of extremes, but they'll sometimes reward your loyalty. But oftentimes it's surprisingly to say, no, like we can't do anything and we may need to move. So definitely where a broker like us can help you with keeping everything sharp.
Yeah. So I guess to kind of wrap up, if you are a first-time buyer and if you're on a lower income, things are a bit trickier than they used to be to get a loan, but there are still plenty of opportunities to move forward with buying a home. Jaden, you mentioned the first home guarantee scheme. There's the first home buyer grants. There are options that you can look into that can help you sort of navigate through the home loan application process. And there's some great resources on the Hunter Galloway website, which sort of talk about some of the things you can do to prepare for getting a loan, like sorting out your finances and your debt, etc. And it's still possible to move forward and buy a home even if things feel a bit harder than they used to.
If you're ready to explore these opportunities, contact us at huntergalloway.com.au. We're here to help you every step of the home buying journey. We're mortgage brokers. We're based in Brisbane. We help people all around Australia. So if you want help or a free review, hit us up at huntergalloway.com.au. We'd love to help you out. And until next time, we'll see you guys.